Hello, in today's video, I'm going to talk about the most recent update to the ATR module, and specifically a recipe to use it with the current uncertainty of the market. I'm going to start this discussion by talking about XRP and Ripple's headaches and allegations that the SEC has levied against it. I'm going to start by taking a look at the bigger picture, and that is XRP is a pre-mined coin. There's no mining involved with it, so Ripple held all of it in the beginning. The SEC's allegations are that it is a security because Ripple held the entire amount of it at one time. This allegation technically could affect any pre-mined coin. Now, coins like Bitcoin, you have to mine. But many countries have banned these coins because of the excessive power consumption required to do the mining process. So if a coin is banned because of excessive power consumption, and it is blocked because it is considered a security, then this allegation from the SEC could literally cripple the entire crypto market. This has led to a lot of uncertainty within the market and a lot of turmoil that does need to be challenged openly and aggressively. If any asset can be considered a security at any point in time, then that threatens the very basis of the entire cryptocurrency market. It is important to remember that an asset will become a threat to the government anytime an individual can use that asset to purchase or sell essentials. An essential item is food, water, shelter. So any of the essentials, if you can purchase those items without government permission, you are in effect a threat to the government. Remember that the whole point of government is control, which is why there's always a national currency, and why many countries have blocked cryptocurrency just because of that perceived threat. As long as the government controls the buy and sell of essentials, you are not a citizen, you are a slave. It's that simple. If you can operate without government permission for purchasing the essentials, then and only then can you call yourself a citizen. But as more and more countries take steps against cryptocurrency or foreign exchange currencies of any kind, it is clear that the citizenry is just a made-up word, and that as long as the government can decide who gets food, medicine, and shelter, they do indeed control the people. That is the bottom line of these allegations. And that is what they really are trying to decide and determine. The SEC will revisit an issue as much as it needs to ensure it maintains control. So don't believe or think that just because it has already ruled once in Bitcoin's favor, that it won't go back and change that as soon as Bitcoin is able to undermine the authority of the government. Any currency that can purchase essentials without government permission is an automatic threat to the government. We are standing on the precipice of cryptocurrency being destroyed if this allegation is allowed to stand unchallenged. Think about the countries that don't allow crypto at all and the stranglehold they hold on the population in terms of the essentials. And it becomes very clear how important this decision is in favor of Ripple. I'm not in favor of a centralized coin at all. I don't like it because that puts too much control in the hands of one person. And that's one of the biggest arguments against fiat as well. And that is a problem that needs to be addressed on a global level. This situation will take a precedent, either for the crypto market, or you will see it to begin to erode the capabilities and functionality of the crypto market. So it is important to pay attention to what is happening here. Bittrex has delisted XRP, and Coinbase is following suit and delisting XRP. It's very clear that if this continues and the SEC does rule against XRP, it won't be long before other pre-mined coins will be put under the spotlight and also have rulings against them. This needs to be watched closely. And it has led to one of the most recent recipes that I'm about to demonstrate. Excuse me, they're tongue-tied. A lot of people have been asking for resilient recipes in light of the uncertainty of what is happening with Ripple. Some of the more aggressive accumulation recipes have higher risks than what a lot of people are really looking at. Second, people are at the end of their savings accounts and they need to be able to take in and take on less risks. This pandemic is wearing a lot of people thin, and it's beginning to hurt them where it counts the most. So they're trying to scale back and cut back and try to keep something going to help them a little bit here and there. The ATR rebuild that I'm about to unveil was really planned for something much more elaborate. But through careful testing and analysis, it has unveiled a rather interesting and unusual side effect that has turned out to be quite profitable. I'm going to put this on ADA. Now I'm using Binance this time with a base currency of USDT, simply because there are more lower quality coins on Binance than there are on my usual exchange of Binance America. Now the first thing you'll notice with this updated ATR, the rainbow is gone. The wonderful rainbow spectrum that I had to be sacrificed to bring in the additional and extra features. This ATR has much more to it. The boundaries are still the same, and this line represents the boundary for the upper, and this one represents the boundary for the lower. The upper boundary now has 1 of 30 moving averages. So does the lower boundary. The look back affects that in a different way now than it did previously. Now, as you can see, I'm not running a confirmation. What makes this process stand out is that is really this entire indicator. It's a very simplistic and very short process to set up. And I will put this link in the description of this video. Normally, you would see me taking the strategy as a profit. For example, something like this, and getting some sort of monster result. But this particular recipe is unique in that it is better suited for a hit and run tactic. I'm using a flat take profit of 2%. And it's produced 12 trades. Now that's live data. If you don't have the risk for live data, be sure to use historic. It is important to pay attention to your risks with respect to either historic or live data. Sometimes it can make a big difference in your trade cycles. This time it doesn't. But you'll notice instead of just one trade cycle, now your accumulation is 2. So you'll want to be aware of how much you're accumulating. It is important to pay careful attention to your risks. I prefer the live data because I want bleeding edge rapid, but I don't recommend it unless you are prepared for potentially double the budget. So you must be aware of that factor. This recipe will work on TradingView's lowest subscription, which makes it rather unusual. It is not very suitable for higher time frames, even though you can get some work out of it. You will find your returns diminish drastically. So I wouldn't go above the 5-minute at all. But really, it was tuned for the 1 minute. Now let's take a look at some coins. The one thing that you need to pay particular attention to is the number of purchases per cycle. You will find in most cases it rarely goes above 1. Once in a while, you'll see it hit 2. So far, I have not seen it hit 3 at all. I've not done an exhaustive search of every single potential coin, but nonetheless, it is something to carefully look at. As you can see, it comes in, it gets out relatively quick, with as minimum risk and exposure as possible, even on coins that are extremely weak. This is where this unusual combination tends to work out well. And that is the real surprise. Now let's cut this one down by using historic only. As you can see, it went from 18 down to 7 trades. So this is a case where live data has double the budget, if not more. It's something you need to be aware of. I personally like it because it fits my trading approach. But if you're not used to dealing with retracement or repainting, use historic data, and you will find it still does a very good job. But switching to historic data does require more accumulation, so just be aware of that potential as well. For now, I'm going to switch it back to live data. Now, the one thing that is important to reference in this is I'm using a take profit of 2% in the strategy, and I'm using my bot as a take profit of 2%. I'm using both layers as a redundancy in case something happens to get out of the trade at my profit level. This is a safeguard that is and should be built into this recipe when you set it up. If it misses a buy signal on one coin, it's not that big of a deal. If it misses a sell signal that could cause deeper accumulation, that could be problematic. So you want to be able to maintain that double redundancy for your sell position. And as you can see, live data using band. One position, 17 trades. Not a perfect coin, but it does have its risks. Now, if you go to historic data, you'll notice the accumulation increases. It's not over the top. It's not insane, but it's something to be aware of. So when you plan your risk assessment, this does have a very low accumulation rate. It is good for trading lesser quality coins. Coins that you would not normally trade can be traded with this approach with reasonable confidence. The other thing that makes this particular recipe stand out is you don't have to hover over it as much because your accumulation is kept so low, meaning your exposure is kept low as well. It's not a set it and forget it recipe, and no such thing exists. But it is a very good recipe that can run on its own, and even if something does happen, with your trading bot having the resiliency and doubling of a take profit setting, is a self-corrective situation with minimal risk. So if you end up in a situation where you can't check your bot, and for whatever reason this sell signal did not take place, as you can see, it will pick up another position, but then it will sell it off. So it will self-correct pretty quickly in most cases. So it is what also makes this particular recipe stand out, is that the risk mitigation of the self-correction can be quite appropriate on the basis of your trading. For example, here is another coin with a very poor history, and yet with live data only uses 2 positions. Now there is retracement, and that is exactly what this particular recipe hopes for, because retracement here means more trades up here. That is important when you're looking at this recipe, and that really is true for all recipes. Retracement means more opportunities. Retracement means more chances to profit. By taking and tracking real-time data in a way that allows you to seize the moment. As you can see, without retracement, you're only going to get 7 trades, period. And it's going to require an accumulation of 5 positions. That's fine, and that's still quite good. $50 at 2% is a very good exposure. So be sure you look at both situations to decide what is appropriate to your risk assessment. And most importantly, take careful note of your coin choices, because this coin is one I would never trade with most recipes. It is simply too high risk. But with this particular recipe, I would chance it, just because, depending upon which way you look at it, whether you're using live data or historic data, it mitigates the amount of risk you take, and it still provides a reasonably solid possibility. So always be sure to test every circumstance. There's good and there's bad to every trading paradigm. This one works on the basis of opportunity. It's neither wintry nor summer. It may work relatively quickly, or it may take a while to actually do anything. As you can see, when we look back in the history, runs may be a while before they kick in. Then again, you might end up with a market situation that fires off multiples quite easily. This is about risk, purely and wholly, and the current setup is about taking as little as possible, given the uncertainty of the market. And that really is the importance of any kind of a recipe like this. Here is a coin, the first one I've seen that actually requires 3 trades on live data. But even still, look at the number of trades here. Now, let's see how it looks with historic data. You need to change all modules if you change to historic data or back to live data. all modules have to be changed. That is important for consistency. Now it says it's going to take 5 positions. That's still pretty good. And if you set aside 10 positions as a buffer, then you've got yourself a little bit of playroom or expansion room for a worst case scenario. So basically you're trading within 1 3-day period a 20% profit using only at most $50. That's fairly good. Now, be sure you take careful note of your budget, plan your risk assessment, and be sure you take a look at opportunities like this that do work well. This is one of those situations where when opportunity knocks, be sure you take a good look at it. And as long as the SEC is playing games, wrong one, at least having a mixture of different recipes, including ones like this, can help you deal with any difficult situation, including situations that you normally would not deal with that turns out to have very profitable circumstances. Now, for reference, I'm going to go up to the 1 hour mark. And I'm going to zoom this in after I show you. As you can see, it's not that over the top. So on a 1 hour mark, as you can see, it still has very limited exposure. And that is important. Even on your lowest quality coins, look how infrequent it actually trades. And yet this is way back in March. So the crash of March 2020 produced one trade on the 1 hour mark of this coin. So this would be a very wintry approach to a situation that within a matter of a couple of hours would exit at a profit. As you can see here, that is exactly what happened. It made the entry, and then literally within a very short time frame, it got out with a profit. So this kind of a situation tells you just how limited a recipe like this will be. Don't underestimate these unique little opportunities for helping to mitigate risk. I have since switched my own personal portfolio to trading just this particular recipe, simply because I wanted better opportunities with less risk. The uncertainty and the volatility of the market is not something I really can afford for deep accumulations. So when I came across this, and I actually tested it extensively, it turned out to be surprisingly good, surprisingly simple, and very resilient to a lot of coins I would never trade under most conditions. I do not recommend following my trading. Do your own research. Make sure you trade coins appropriate to your own personal finances. But if you use this recipe, you at least will have a good starting point to having a well-rounded, resilient recipe that is very defensive and yet capable of opportunistic purchases. While we wait for the SEC and Ripple to sue each other, you need to be able to continue to trade appropriately. And this kind of approach, and there are other opportunities and other approaches that work just as well, but this one does a good job in finding what it perceives to be the bottom of the market when it places its purchase. Don't knock opportunity when it's giving you an easy fix, and this certainly is a recipe that falls in that category. Trade safely, trade responsibly, and always expect the government to put its own interests above yours. Until next time.